Good morning, Jake. That's a little nice intro. It's simpler and the nice jingle makes me so happy here in the Friday morning. How are you doing?
I'm good, thanks. You're right. It puts you all at peace, doesn't it, Pierre? But yeah, I'm doing well, thank you. Good to be back on this again in Nico's absence.
Yes, absolutely. And Nico is traveling today. Nico Jansen, our dear co-host here to London, and I guess in preparation for ICE next week would be my little guess here. So it's nonetheless it's really nice to have you back here, Jake, as a stand-in here today. And I mean, as a starting point, we have ICE in front of us next week. Yeah, it's exciting times. I'm personally very curious to see the amount of delegates that will show up to the conference next week. Like when you speak to people, Jake, what's your feeling of ICE next week? Like if you were a betting man, what would you
Yeah,
say?
I think there's an excitement around. To be honest, I'm not. I don't think delegates wise it's going to be as big as it has been in the past, but I don't think everyone necessarily sees that as a bad thing. For me, this will be my first time back in London, where I used to live for 10 years since July of last year. So I'm really looking forward to going back and catching up with friends and both in the industry and outside. And I think people are just quite interested to see what ICE, obviously the biggest trade show, has done to kind of transform into these. Well, I don't want to say post-COVID, but you know what I mean.
Yeah.
We're over the worst of it. Certainly over how bad it was the last couple of years when it's had to be postponed or cancelled altogether. And I think for a lot of people that haven't been able to travel abroad to certain gaming conferences, this is huge for the UK industry and the London centric industry because it gives you all that one big meeting place where you can kind of congregate, have a drink, have a coffee, catch up with people, find out all the business gossip you've missed out on. Certainly what I'll be doing there, all three of those things. And obviously, yeah, I get to meet you guys as well for the first time
For the first
in the
time,
flesh.
yeah.
Yeah.
In the flesh, like yeah. Who would have thought? It's we've been working together. We've been working together now since November of last year,
Mhm.
and yeah, I guess this is one of the interesting things with COVID, the sense that we have become a remote first organization, as have many other organizations too, and forming these friendships and becoming colleagues together and so on. But over a computer screen is interesting, and I'm excited as well for a good game of Four Kings and a couple of shots of tequila or something like that on Monday, Jake, and see what comes out of it. But
Well, we've been doing that over Teams anyway, haven't we, for the last few weeks? So it
yeah,
doesn't make a lot of difference. But no,
yeah,
yeah, I can't wait for that.
exactly.
Good old fashioned knees up in London. That'll be great.
Yeah, absolutely, Jake. And it's like it's interesting to speak to people. It seems to me that ICE is going to be a somewhat more local show this year. Like I don't know about you, but when I speak to many of the people on the American side of the pond, for example, most of the American professionals that I've been speaking to lately are actually not going to ICE this year. And the feeling I'm getting is like on the European side, kind of most people are going, or everyone is going that I speak to. But outside of Europe, it seems to be people seem to be a little bit more hesitant. So that's what I will be thinking about when I go next year, because I think after COVID and 2 years into this, to some extent, our habits and so on have definitely changed, and the way we do business is it's okay to do business via Zoom. It's okay to set deals on a digital sphere. So I'm wondering a little bit now when we come to ICE this year. This will be the first mega show, so to say, the first global mega show, and the I wonder how the global nature of that show will pan out. That's something that I'm really interested to see, because it would perhaps mean that the future belongs perhaps more to more boutique shows that are targeting a specific market or these type of
Yeah,
things. And obviously, as an event organizer, this is what interests me equally as
yeah,
much as just meeting a lot of people.
yeah. I think a lot of people will be doing the same thing, kind of analysing and seeing how it goes, and then potentially, coming up with strategies off the back of that. But I think you're right. I think the last one was it February 2020, and that
Yep.
was the kind of all singing, all dancing international affair as we come to associate with ICE, where you had people flying in from Asia, people flying in from South America, people flying in from North America. And I think you're right in that it might be more European delegates this time, just because it's complicated to travel. Obviously, in Asia, you have kind of stricter COVID laws than you have probably over here, certainly in England. And then again, with America, I mean, it's a long way to go, right? And they probably didn't have as many trade shows on their own turf to attend as they do now. Obviously, we're starting one. We've got one in May, which will be a brilliant event, and they can probably kind of have that luxury now of, they're the kind of hot potato, aren't they? So they can wait for the market and the trade shows to come to them rather than having to, traipse all the way across the globe. So yeah, I think that's probably explains why there might not be as many US attendees as normal. But again, that's just speculation at this time, isn't it? We'll have to wait and see.
Absolutely. The trends are constantly changing and shifting, so need to stay on top of it. But it'll be interesting. Nonetheless, hope to see a lot of people in the UK next week for sure. And just a good morning to people who are watching in here as well. Really nice to be back here with the Friday news. As we do every week. Want to mention as well, of course, that we have two fantastic sponsors that are supporting these weekly updates, which are Playzone and Simpler. So thank you to you guys for the support and keeping these updates alive. And we have a couple of really interesting topics here in front of us today, Jake. Before we dive into them, I want to just kind of read a little bit of the agenda that we have in front of us here, which is we're going to start with a bit of an update on the stock market, a short update, what's happened in the last week. It's been a quite interesting week on the markets in general. We are going through, on a macro level, some very volatile times at the moment. So we're going to talk about that. Obviously, big news this week is Ontario went live for iGaming, finally. Really anticipated and very interesting regulation that we're going to jump into as well. New York has updated its numbers, as they do every week, and now we are moving on from March Madness into a little bit of a lull when it comes to the betting markets in the US. So we're going to talk about that a little bit. Of course, the news has not escaped that many people today that Shelley Sutter Haddad has stepped down as CEO of Casumo. Big news that you broke, Jake, yesterday. Of course, we're going to jump into that. And I think the biggest news story of the week is the fact that 888 has renegotiated its terms for their upcoming acquisition of William Hill. They have negotiated a discounted price of the acquisition, where they have negotiated down the price about £250 million due to macroeconomic climates and the regulatory issues, which is something that we're also going to talk about. This acquisition has really been a bit of a question mark in the last couple of months, because this is a reversed takeover, meaning that 888, who is acquiring William Hill, had a lower valuation. So 888 at the time of the acquisition was valued at a lower amount of money than William Hill that they were taking over. So it's a reverse acquisition. Now, since then, 888 have lost about 60% of its share price. So it's been a bit disputed whether they will be able to actually complete the transaction. So we're going to jump into that as well, of course. And finally, as well, if we have time here, it's a lot of topics to cover today. But DraftKings has extended the Golden Nugget acquisition deadline as well. So that's also another interesting kind of M&A activity that has been a little bit
very similar parallels to that 888 deal as well. A delayed acquisition and a 60% decrease in share price. Exactly. And obviously the huge all stock component as well. So yeah, that's an interesting one to dive into, I think.
Absolutely. So as a starting point here, just as an update on the stock markets here today, there's some interesting movements. We're going to jump into 888 in a little bit, but the clear winner on the stock market this year, the outstanding winner, is 888 on the news of this renegotiated deal with William Hill. The stock markets, the shareholders reacted very positively to this news, and the share price at some point jumped like 26% on these news. But they finished 21.5% up in the last week or so on the stock market. So great week for 888. Also, Evolution has had a good week as well. Although they have been bouncing back a little bit, they had a really positive start of the week and ending of last week, but they came down a little bit in the last couple of days. But they still finished 4.6% up this week on the markets. Other than that, not that many big movements in the green. It's been a lot of red in the stock market in general. It's a tough environment at the moment, and we can see, for example, that the Sport Radar have lost 16% on the markets in the last week. DraftKings, which if DraftKings was a song, it would be "Hot and Cold" by Katy Perry, because after last week's rush in the green.
How does that one go again, Pierre?
You want me to sing it?
I was hoping you'd do a little chorus line or something. No, I put you on the spot there.
It's a funny saying when it's when the temperature is perfect outside. You say that the temperature is Katy Perry. It's not too hot. It's not too cold. It's Katy Perry.
Right.
So I'll leave it with that instead, and I'll save our listeners the song for now. But still, Pan National Gaming down 11%, Neo Games down 11.5%, DraftKings, as we mentioned here, down 12% on the markets, Bally's down 10%, IGT down 9%, Caesars down 8.8%, Win down 70.2%. So we can see the kind of macro pattern here, which is the fact that the markets are down.
And a lot of those ones you just mentioned are obviously New York or NASDAQ listed, and that reflects that stock market as it stands right now. I think Gambling.com Group is one of the only companies listed on there that seems to have done really well this week, actually, and stayed out of the red.
Yeah, absolutely. I don't have them in front of me at the moment, Gambling Group, but do you have an insight on? Oh yeah, there we go. I can still see that they are down 4.5%, Gambling.com, but they still outperformed
it's been up and down
markets,
most
yes.
days this week, to be honest. But
yeah, fair enough. And yes, Roy, we will save the karaoke for Monday's ice gathering. I think that's a good introduction to the team over there. But yes, something else to mention here is like, why have the markets been falling in general this week? And it's an interesting question, because again, we are living in a volatile macro climate right now, where investors are scared that interest rates are going to be increased in the next couple of months, and the expectation has been that the Feds in the US will increase the interest rate by 0.25% times 4 during the years. So at the end of the year, we'd see an interest rate of 1%, since we are currently at 0%. But there was the minutes of a meeting between the Feds came out a couple of days ago, where basically at the start of the war between Russia and Ukraine, the discussion was to increase the interest rate by 50 points, so 0.5% at one go. But because of the war and the uncertainty that the war has brought on the financial markets, the Feds decided not to raise the interest rates at that time. But the fact that they were discussing to raise them with 50 points, that caused a turmoil in the markets, because now the expectation is that sooner or later the interest rates will be raised much more than was originally expected here. So the markets took a sharp turn downwards based on the news of this meeting that came out, basically. So that's basically some insights on the stock markets as such. And next point I'd like to dive into is the New York numbers here post March Madness, and I think we're gonna stay on this a little bit briefly here, Jake. But I know that we have a chart here to display the handle of week by week in the state of New York. And if we can get that chart up on screen, actually I can click it up here. So we can see that FanDuel is continuing to gain market share here on a week-to-week basis of the total overall online betting handle against Caesars and DraftKings. But actually, the growth in the market has slowed. And we can see a quite sharp downturn in the total amount of GGR in the last week. And that's, of course, because March Madness, this basketball hype in the US has ended now. And that brings us to the topic of seasonality here, which is a big point for US online sports betting. And the expectation is now that we'll see a quite aggressive downturn in the handle for the next coming months, right? Jake, if I'm not mistaken, like many of the sports have ended now in the US for the season.
Yeah, like you say, March Madness is over and done with now, and there are a few people getting excited yesterday because it's the start of the Major League Baseball season, which is obviously going to be quite a big betting event for operators. And there was a period earlier this year where they were worried that wouldn't be going ahead at all because obviously the players were locked in a kind of pay dispute with the owners of the franchises. So I remember DraftKings saying, it's a welcome relief that baseball is going to be back and starting because it is a fairly significant betting event, but obviously nothing on the scale of the major ones in the US sporting calendar, such as March Madness or the Super Bowl. And I think probably it's going to be relatively quiet now until June when we've got the 2022 NBA Finals to look forward to, and obviously the US Open Golf then as well. But I don't know about you, Pierre. I'm a huge football fan, or soccer, obviously in the US. And one thing that I've just considered that might be really interesting this year is obviously a Winter World Cup for the first time ever. So we're going to see November and December absolutely full to the brim of international football fixtures. And that's something that's going to be alien for European operators, let alone US operators. But crucially, obviously, the US national team have qualified. They're in England's group, so I won't be cheering them on personally. But imagine if they storm the tournament, do brilliantly, get a result against England, get through the group stages. If you're a DraftKings or if you're a FanDuel or a Barstool Sportsbook, you're going to be absolutely laughing, and there will be so much opportunity to capitalise on that. And I know football or soccer is, still considered a slightly niche sport in the US compared to baseball or NFL, but they've got Christian Pulisic who plays for Chelsea, and he's kind of like the next big rising star of the US national football team's roster. And if he has a good tournament, then I think the betting activity is just going to absolutely fly for US operators.
Yeah, it'll be interesting to see. And personally, I don't really want to talk that much about the World Cup. It doesn't really matter too much to me.
Subject.
As a Swede, yes, it didn't work out that well this time, unfortunately. But yeah, we always have England to cheer on, I suppose. I don't know. Did any of the Scandinavian teams make it through to the World Cup?
I don't know. You put me on the spot now.
Sorry about that.
I couldn't tell you.
Maybe the chat can help us. If there was any of the Scandinavian teams that made it through to the World Cup, we'll wait. We'll wait and see here if there's any insight. I'm not sure if it was the case actually, but still, yes, it will certainly be interesting to see how the first ever Winter World Cup will take place here later on in the year for sure. And and yeah, Bodgan here from Poland, who managed to beat the Swedes, is nicely writing to me in Swedish that Poland is going through here. So yeah, thank you very much for that, Bodgan. And Rory points out here that Denmark made it through, which is quite kind of cool after the European
definitely
a couple last year. And I saw that. I thought it was like an emotional moment where the player in Denmark who collapsed on the field. Do you remember his name, Jake?
Yeah, Christian Eriksen. He's
Christian Eriksen, yes. He scored his first goal back
in the Premier League now. Exactly, yeah, and scored for the national team. It's great to see him back in top flight football, because we weren't sure whether he was ever going to play again. Now here he is, kind of pulling strings in the Premier League every week like he used to at Tottenham.
Yeah.
So yeah, great to see.
Amazing. So interesting stuff there. So something to just keep in mind when we look at now when we go forward on the handle of sports betting in the United States is that we are expecting a downturn, even though we have the golf and we have baseball. But expectations are now that we are kind of post basketball season, post the American football season, that are, especially American football is like by far the biggest sport in the US. That obviously we see a bit of a downturn here on the amount of handle in the next coming weeks and months until the season start again in early fall. Moving on now, Jake, of course, the big story of the week is the fact that Ontario has launched iGaming finally. And I know that you've been digging deep into the stories here behind the launch. And can you give us a bit of an update, Jake, on what has actually happened in the state, in the province of Ontario?
Yeah, absolutely. Like you say, it went live on Monday. As far as I know, without too many technical issues, certainly from the kind of regulatory point of view. Probably has something to do with how favourable the legislation has been. There aren't too many tough requirements for operators, but yeah, we've seen 888 and BetMGM go live with 3 different websites each. So they've split their kind of sports betting, casino, and poker products. Leo Vegas has entered the market, interestingly, with its Leo Vegas flagship brand and its Royal Panda brand as well. So it'll be interesting to see kind of how that gets on in the North American market. And then some other big players are Bet365 alive, Bet Rivers via Rush Street. We've got Caesars, Coolbet, FanDuel, PointsBet, Rivalry, and The Score, who are obviously 2 Canadian first operators. And Kindred Group as well. So they're the companies that have gone live at the moment in the regulated market. Probably worth pointing out there are still plenty carrying on outside of that market, including Avid Gaming, which is a company that Entain recently agreed to acquire. So that's going to be an interesting dynamic, obviously seeing them enter on a regulated basis in partnership with BetMGM, while the other side of the business is kind of continuing to operate in the grey market in its partnerships with the tribes that were in place previously. So yeah, a lot of different strategies happening at the moment. I don't know what's your initial take on Ontario, Pierre?
Yeah, it was really exciting to sit down in a podcast with the president of the Canadian Gaming Association the other day to discuss this very topic. And something he pointed out is, something he pointed out, which was really interesting to me, is that on the B2B side of things, there isn't a B2B regulation specifically, like companies like Evolution or Playtech or Pragmatic Play and the game studios. They aren't necessarily being taxed in the province like the operators are. There's a 20% tax rate on the operators, but but rather the B2Bs, they have to sign an agreement, and this agreement basically states that they promise not to. They promise to kind of they sign kind of like a code of conduct. They are not going to supply gray market operators any games, and they need to be responsible and so on and so forth. But the operators are not allowed to work with suppliers that have not signed this agreement, right? So take an operator like DraftKings. The suppliers DraftKings are allowed to work with in the state, in the province of Ontario, are only those who have signed this agreement, meaning that it's really difficult for, and like same thing goes back to the B2Bs. So an organization like Evolution are not allowed to supply games to gray market operators. And so what this means essentially is that you effectively make the product offering for the gray market operators a lot less interesting. So obviously the major suppliers will all sign this agreement. They will all want to operate in a regulated environment. So the gray market operators in the province of Ontario won't be able to supply games from Evolution, from Pragmatic, from Playtech and others. And I just think that's a brilliant way to curb the proposition to for players to play in a gray market environment. So it's not that attractive to play at a gray market operator if you only have the game suppliers on the fringes, let's say.
I
The kind
think
of
that's
tier 2,
right.
tier 3 suppliers. I thought that's a great way for the operator, for the regulator to actually increase channelization rates in a really good way that just makes total sense.
Yeah, I completely agree. And you know, the theme of that podcast was kind of how the regulators worked in combination with the operators rather than kind of on top of it or against it, which is refreshing to see. But I think you use DraftKings in that analogy, but obviously they haven't. They're one of the sort of glaring companies that haven't gone live in Ontario yet. We're not 100% sure why exactly. They've applied for a license. Obviously, it's taking some time to sign that off from the regulator's office. But yeah, they already said obviously they were in for a tough time considering the grey market environment. The fact that companies like The Score have a much bigger Canadian database already, and now they're going to be delayed ahead of a lot of these companies by another week or so. So maybe that's even more of a disadvantage. But yeah, we've already seen not only launches but an app, like a real flurry of kind of media agreements. All these things that we saw in the US states last year are now taking place in Ontario. So FanDuel was struck a multi-year contract with the Sports Network, which is kind of like a huge, kind of like ESPN in Canada. Basically, I think they actually have one of the ESPN channels, so it shows all the ice hockey, all the Canadian sports on cable television. And then the Score has yesterday announced a 10-year sponsorship kind of partnership agreement with the Toronto Blue Jays, which is obviously the Ontario's MLB franchise. So yeah, they're the first two to come out, but I wouldn't expect to see, you know, another 5 of these kind of deals announced next week, such as the pace of the market at the moment.
Yeah, and you know something else that Paul Burns, the president of the Canadian Gaming Association, points out is how proactive the regulator has been to work with the industry. I mean, we are European, Jake. I mean, you're from the UK, I'm from Sweden, which are two very tough climates regulatory-wise for the iGaming industry, where seemingly the politicians and the regulators are communicating more with each other than they want to communicate with the operators in order to deliver a sensible regulation on the table. And in Canada, it seems that the regulator has taken an opposite approach, where the tax rate is reasonable at 20%. The operator has been very proactive working with the operators. For example, what they have said to the gray market operators is basically that they haven't forced them to close shop in the market until the regulation comes into play. They have just basically said that if you apply for a regulation,
yeah, as long as you
prior
apply,
to
isn't it, basically?
yeah, prior to the state going live, they will kind of be granted some sort of amnesty in a sense, where they are
Yeah,
allowed to operate gray until the market goes live. However, if you don't if you don't apply for the license before before the province goes live, and you continue to supply the gray markets, you continue to supply the players on a gray market level, then you will have a lot more tougher time to apply for a license at a later stage. So the operators, they kind of have to choose now, like, are you going to go the regulated route or the unregulated route? If you go the regulated route, the regulator will work with you. You know,
yeah,
they'll be
exactly.
lenient. Yeah.
And I think it's clear that the gaming association has obviously been close to this process
Yes.
throughout, and it's not just been kind of written up by politicians that maybe don't understand the industry. Paul and his team are obviously close to this and lobbied for it for a long time, and we're kind of seeing the fruits of that. Fruits of that develop now, I would say, and they even did a dual presentation on the Toronto Stock Exchange, didn't they, to say that
Yeah.
our legal market is now open, and like celebrated it almost. And like you point out, that's such huge contrast to
Yeah.
a lot of European markets and their attitudes towards regulated gambling. So
Yeah, exactly. You don't really see big parties and big tents and celebration and fireworks when the Gambling Commission announces the latest update in the UK regulation,
no,
right?
no, that's an understatement.
For sure. Um, all right, Jake. I mean, what I'm just to kind of round the topic off a little bit. What I'm most interested about now is waiting for the numbers to come out in this market. It's going to be so interesting to see who the market leader is going to turn out to be in the province of Ontario, with the traditional European operators having established a foothold for many years. You have the native Canadian brands, like you mentioned, the Score, PointsBet, and others that have a lot of brand equity
Yeah,
in locally, and then you have the traditional American operators like the DraftKings, for example, when they do go live, that traditionally have been acquiring players by pouring money into marketing, and it's going to be so interesting to see what comes out of the market when the first numbers are reported.
yeah, for sure. And don't forget Bet365, Pierre. Never forget Bet365.
But never for that cookies so high. Okay, fair enough. Fair enough.
They would be my tip, I think, to
Yeah.
to take this market by storm.
All right. So if you would place a bet on, if there would be,
Yeah,
you can go to an online betting store and you can place a bet. You would put it on Bet365 as the market leader.
yeah, I think so. Purely based on if I was going to place a bet, I would
But
probably.
you're biased.
Yeah, but it's the best product experience
Yeah.
in my eyes, so that's why. But yeah, it's whether Canadians are obviously. I think they're familiar with that Bet365 anyway because they were operating there before. So
Yeah.
um, it's important to always consider America as the US as the exception for Bet365 rather than the rule. Every other market they basically have dominated in,
Yeah.
probably with the exception of Sweden. But yeah, I fancy them. Anything operational, I fancy them. So yeah, we'll see.
Fair enough. And we have Robert as well, who is taking a bet on Bet365 as well. And so we'll have to wait and see. Essentially, I'm inclined.
I'm
I'm
in good
inclined.
company then. Good man, Robert.
Absolutely. Uh, I think what's going to happen is we'll see a lead amongst the European operators at the start, but then I think that as we go along, we'll see the Canadian brands especially. They'll start eating market share, and potentially they'll take over the lead in the market. Let's say after 6 or 7 months, perhaps something along
Yeah.
those lines. Yeah.
Yeah, I think the score is going to be a serious threat
Mm.
as well.
Yeah. Yeah.
Yeah,
That's,
if they
that's
even capitalize on half of the kind of brand respectability that they've got, then they'll be
yeah.
right up there.
Yeah. And yeah, then we'll see. I'm really curious to see DraftKings, FanDuel as well. But yeah, we'll have to follow up when the numbers do come in. Uh,
Hmm.
Next point as well on the agenda. The time is absolutely rushing past us today, Jake, as per usual. But
Yeah.
a story that you broke yesterday is that Shelly Suter Haddad has stepped down as the CEO of Casumo. Now, this is a developing story, and we are trying to get actual comments from Casumo so far. But according to many different sources that we've heard, is that this has actually been the case. So, can you elaborate a little bit on this story as well?
Yeah, for sure. I think I don't think she stepped down. I would say it's more a kind of parted company. So it sounds like it was agreed mutually that they're probably in the right place to go for different leadership right now. And like you say, we're waiting to hear, Casumo's official side of events, so I don't want to comment too much on that. Hopefully they get in touch with us, but yeah, Casumo's an interesting one, right? I mean, it was originally a very kind of brand-led, disruptive casino operator that was kind of, of the strategy of let's break things and fix them afterwards. Went into a lot of European markets and kind of, went heavy on the marketing side of things, and really took up some quite impressive market share in the early days, and then kind of with less regard for perhaps the regulations, and that ended up in a couple of quite significant enforcement fines, certainly in the UK. And then they thought, well, maybe we better tweak this approach slightly, and I think that's why Shelley was appointed. Obviously she's worked at a lot of very kind of compliance-led businesses before. She has that Israeli gaming background, which which obviously is tried and tested in this industry. And it's whether they've kind of sacrificed some of that growth and that revenue to be more compliance led, basically, and whether they now think that was a mistake, whether they want to reverse that. But yeah, we shall see. Obviously, if Oscar, who was the CEO before, comes back in as chief executive, I'm sure he'll have his own plans. It's his company, obviously, a co-founder 12 years ago, I think it was. He knows the company with his business partner Rasmus kind of inside out better than anybody. So yeah, they'll know what's best. But yeah, never nice to obviously see a chief executive lose their jobs in this industry. But I'm sure Shelley will probably be taking some time now to refresh, and we'll probably give Ice a miss, I would have thought.
Absolutely, yes. It's the developing story, as we said, and we'll have to follow up with more official comments here rather than the rumors that has come out so far. But it seems to be quite clear that Shelley Sudad is not the CEO of Casumo anymore. I think that much we can establish. And I see
that's for sure.
Yeah, I see that, Robert, you posted a link here to a Twitter comment. We can't click that, unfortunately. So, Robert, if you want to give a little bit more clarity on what this comment includes, that would be interesting to see, especially if it's something related to Casumo. But we can move on from this story a little bit now, because we have another kind of the hottest story of the week, I would say, and we don't have that much time left in our hour today, Jake. But essentially, 888 has been front and center in the news this week because they have renegotiated the terms in order to acquire William Hill, which has been a quite controversial acquisition that was announced back in September of 2021. It's basically a reversed takeover, where at the time William Hill's market cap was something around or basically the deal closed at £2.1 billion, if I'm not mistaken. And at the time, the market cap of 888 was around 1.5 billion. So it's a reversed takeover where William Hill was basically the acquisition target was valued higher than the acquirer. Now, since the acquisition was announced, obviously due to macroeconomics and other factors, 888's share price has been falling around 60% since the news of that acquisition. And they now have a market cap of only around £800 million on the market. So for an £800 million company to acquire a £2.1 billion target has been the question if it has even possible to follow through with the acquisition has been a bit cast in doubt in the last couple of months. And there has been rumors that this deal was actually not going to go through. But the news came out then yesterday that instead 888 have been able to renegotiate the terms, and they've gotten a £250 million discount on the share price, and also they've been able to raise £163 million in order to help fund the acquisition here. So when the story broke, the 888, as we mentioned in the beginning of the podcast, the share price soared yesterday with about 25% on the markets. The the shareholders were very happy that this acquisition is going to happen. 888 has seemingly been able to finance the deal, and the price of the acquisition has come down as well. So it seems to be a good, attractive acquisition by William Hill, by 888, and the Caesars have been willing to negotiate these terms here now as we have gone into the couple of accounts. But do you have more details on this story?
Yeah, so I think you're right. I think this stock went up. I think 26% was the highest it reached yesterday. Yeah, you may need to correct me on that, but yeah, basically just because obviously it's going to be a much cheaper acquisition for 888 now. 250 million is not to be sniffed at, especially when you have cash resources equivalent to 888. And yeah, so basically that payment that's due to Caesars on completion has been reduced from 835 million to 585 million. So that is quite significant. And I think this explains why it's been, why there was this doubt and why it's taken a long time to get this over the line, because obviously there's been a negotiation behind the scenes between Caesars and 888 as they didn't see quite eye to eye on the price. And I think that's understandable. I think Caesars has still pulled off a really impressive deal here. It's important to remember that they bought the entire William Hill business for just 2.9 billion, right? And they've kept the US assets, which are arguably, certainly the most valuable to Caesars, and arguably kind of the hottest properties. And then they've managed to sell the rest of the business for 2 billion on again in kind of less than a year. So, they've wasted no time, and I think it's a good piece of business from their perspective. But looking at the bigger picture, this is going to be transformational for 888. William Hill has had its troubles over the last, however long, but it's easily the biggest or one of the biggest heritage UK bookmakers, and that comes with a committed base of customers. The brand is a household name. You get a UK portfolio of shops that are kind of cash generative and can be used for branding opportunities, especially if there's going to be clampdowns in the future on online advertising or television advertising. It's really important to have that shop portfolio so you can put your brand kind of at the front and center. And yeah, the financing was interesting. So they placed 70.8 million new ordinary shares yesterday in a company, and that raised about 163 million towards the acquisition. But yeah, the bulk of it will be financed on debt from the likes of JP Morgan and Morgan Stanley and Barclays and others.
Yeah, what is interesting as well to look at is while Caesars have been willing to negotiate the price of the deal, it's also interesting to note that this rebate, if you will, of £250 million, it represents an 11% cut of the original deal. And
yeah,
if we look at the stock markets since the peak in September, we can see, for example, that Entain, they are down about 20%, something like that, since the beginning of September. We can see that Flutter, they are down 40% since the peak in September, and this is across the board for the international operators essentially. Kindred, obviously, Kindred is down a lot. They're also down 40% since start of September. So we see this pattern emerge, which again somewhat is due to macroeconomics, but also due to the fact that it's a regulatory headwinds in Europe. Netherlands have closed shop, for example, and become a much more difficult market. And essentially, what this means is the 11% rebate is actually not that big if you consider the drop in share price across the board of the operators since the time the agreement between 888 and William Hill. And so it seems that it seems that while Caesars have been open to negotiate, it's not that it's been an incredible rebate or something like this. It's been to be very much like a middle ground where 888 seemingly have been pushing to lower the valuation in order to complete the deal, but the markets have fallen more than the actual than the actual discount that was given. I think that's interesting to keep in mind as well. And there is another factor here as well, I suppose, Jake, which is the fact that William Hill is facing regulatory challenges here, where they are facing an enforcement action by the UK Gambling Commission as well. And there's also nuances in the deal here as well, right?
Yeah, exactly. And I think, this is what investors have probably taken notice of, and that's why the share price went up yesterday, because it looks like, in no uncertain terms, like you say, that William Hill is going to be on the receiving end of enforcement action by the Gambling Commission, and it could be quite substantial by the sounds of it. And 888 has kind of managed to absolve itself of responsibility of that, which is obviously hugely positive, because it means there won't be that regulatory kind of drag on the share price, or that threat overhanging it as this deal proceeds. Basically, because for two reasons. One is William Hill has already set aside 15 million of its full year 2021 accounts to basically be able to pay for this fine. I think the previous highest fine was under 10 million. So if it's anywhere near that, it would make waves in the industry, really. Again, it's looking like it's going to be for social responsibility and anti-money laundering failures, which they usually are at this point. But the other thing is that 888 is protected if it exceeds that amount post-completion by an indemnity policy that's been negotiated with Caesars, effectively saying Caesars needs to pick up the bill if it's any more than what the two companies have agreed upon. So yeah, 888 is free of those shackles, I think, and that's why the share price probably rose yesterday.
Right. A lot less ambiguity for 888, a lot less risk in this acquisition, and also a cheaper acquisition price and a financed deal. It seems that 888 is coming out of this in a good way after the ambiguity in the last couple of months. If this deal was first of all, was it even attractive, and secondly, was it going to be were they going to be able to follow through with the actual deal? So that's why, of course, we've seen a massive uptick here on the markets by 888 in the last week. Interesting stuff, Jake. And I suppose as a last point of today, the last 6 minutes that we have here today, we cannot go through a weekly news session without mentioning DraftKings. It's impossible. And we have a similar situation as to the 888X William Hill deal, where DraftKings have announced the acquisition of Golden Nugget Group last summer, I believe in August of last summer.
Yeah.
And this was an all-share deal, which kind of sucks for Golden Nugget today, because obviously they set this deal at the height of DraftKings share price, and since then DraftKings have dropped about 60% on the markets as well. And so the acquisition that was the valuation of Golden Nugget was at the time, I don't know if you remember what it was.
It was 1.56 billion. Yeah.
1.56 billion was the valuation of Golden Nugget. So effectively, that valuation has been cut by 60%, considering that the shares of DraftKings have lost 60% share value since then, essentially. And now, basically, DraftKings has extended the Golden Nugget acquisition deadline. And so, can you talk a little bit about this as well? Because shareholders have been anxious; they have been waiting for this acquisition to complete. But can you talk about what this means, this announcement?
Yeah, and that's you're right to say about shareholders, because a lot of the questions that Jason Robbins and his management team have been facing in kind of Q4 results calls or investor days has been about Golden Nugget, and that strategy going forward. But yeah, you're right to point out. So the deal was supposed to have completed already in Q1 of this year. It's now been pushed back to the 31st of May. And yeah, I think it's worth pointing out as well that Golden Nugget put out its own financial results recently. So full year 2021 revenue rose by 40.7% to 128.2 million. There was an annual operating loss of 30 million. So that gives you a little bit of an idea into the kind of business that DraftKings is acquiring. But crucially, obviously, Golden Nugget Online Gaming is first and foremost an iGaming online casino-led operator, whereas DraftKings is very much a DFS and online sports betting-led operator. So you can see where the synergies are coming from here, and the rationale behind the acquisition. And the other interesting thing is that DraftKings are going to pursue a dual brand strategy. So they're going to keep Golden Nugget because obviously it's a really well-known gaming brand in the US due to its kind of land-based properties as well. DraftKings will obviously keep its casino, but yeah, Golden Nugget will strengthen that side of the business massively. And I think Jason Robbins has made some estimates as a result of that. So I think they're at the investor day they did last, he basically said we're increasing our 2022 revenue guidance to between 1.85 and 2 billion for this year. And it's important to point out that does not include the impact of the Golden Nugget acquisition. So, any positive revenue that happens this year from DraftKings sealing this deal in May will be kind of an added bonus. And then even then, looking longer term, DraftKings is guided to its long term EBITDA guidance. So we're looking a long way in the future here, 2026, I believe, of 2.1 billion. And again, that's actually excluding synergies resulting from the Golden Nugget deal, which Jason Robbins expects to be around 300 million. So yeah, if this deal does get done, there's obvious benefits for DraftKings. Not so many obvious benefits for Golden Nugget anymore, although I'm sure their owners will stand to get paid one way or another. But it also means that the DraftKings iGaming market share, so for the whole of North America, they think it's going to go up from basically 20 to 25%, based on adding DraftKings and Golden Nuggets market share together. That's long-term market share again, I should say.
Yeah. Interesting the dynamics overall here. We had a really great breakdown of the US iGaming climate of Robin Reed here last week as well, who argued that the headwinds that DraftKings have been facing is short term. Robin Reed is very bullish on the US market going forward. So while the share price had dropped 60%, if you are to believe the bull argument of Robin Reed, we might see that this year is going to be a more positive story. But then again, we have macroeconomic climate. The lead analyst of the iGaming and online sports betting industry of Morgan Stanley, Thomas Allen, he points out that the macroeconomic challenges that we have is already priced into the share price of DraftKings and others at the moment. So even if the macroeconomic climate becomes tougher, he does believe that we have seen the bottom now as well. But again, we see a roller coaster ride within the share price of DraftKings, which can fluctuate 20-30% week by week. It's a really difficult share to value, of course, because they are seemingly quite far away from being able to post EBITDA positive results. Really difficult to know exactly what those positive results will be at the end of the day. But if you are to believe the trends, it's still looking very positive in the end of the day.
Yeah, exactly. And there's a couple of interesting bits in the small print of that Golden Nugget deal as well. So if the DraftKings deal does not complete by 31st of May, which is obviously the extended deadline, then either party may choose to terminate the merger agreement. Obviously, there's no signs of that happening at the moment, but Golden Nugget have had to inform their shareholders that basically the termination could lead to them having to pay a fee of $55 million to DraftKings, which obviously, they would hope to avoid under all circumstances. But yeah, we expect the deal to proceed and be completed by that date.
$55 million to DraftKings, then it could be the first week that they post positive financial results. That'd be interesting.
They'll just reinvest it in marketing, surely.
Yeah, it goes straight into marketing again.
Yeah.
Jake, it's been an absolute pleasure today. But before we finish, we can't finish without looking a little bit outside of our industry into the wider tech and mention the fact that Elon Musk is now the biggest shareholder of Twitter. And I want to kind of just... sometimes I feel like we live in a parallel universe because because the largest shareholder of a 20+ billion USD company just published this tweet.
Oh my God. Yeah, you're right.
So basically what we see here, for those of you guys who are working, not looking at our screen at the moment, is basically Elon Musk tweeting that Twitter's next board meeting is going to be lit, and a picture of himself smoking weed in the Joe Rogan podcast that famously or infamously was recorded a couple of years ago. I just personally, I think it's just I think it's amazing actually that a professional internet troll is now has the keys to the kingdom of free speech to a large extent of the internet, and how this is all gonna play out is just very interesting. And I think Elon Musk posted something like that he paid 2.1 billion in order to implement an edit button on Twitter, because that's one of those features that, for those of you who don't use Twitter, it's super annoying that when you post a tweet and then you realize that you have a spelling error or something, you can't edit the tweet. Right, you have to delete it and then repost it, and it's like an annoying feature of Twitter. And Elon Musk had now taken it upon himself to implement the edit button for 2.1 for the tender price of 2.1 billion USD.
Yeah, I'm sure he has other aims and aspirations, Pierre. I'm not sure that was the sole motive behind it, but yeah, that could be one tangible benefit at least in this kind of post-truth meme-led society that we're all living in at the moment.
Absolutely, that's certainly a discussion for another day. But yeah, interesting nonetheless. Jake, again, it's been an absolute pleasure. Love doing these things together with you, and also thanks for everyone for looking in today, watching in today. And hope everyone will have a really great Friday and a really great weekend. And same to you, Jake. And I see you on Monday.
Yeah, definitely. Have a good weekend. And thanks everyone for listening and for your comments as always as well.
Brilliant. See you guys on Monday. I will see you on
Cheers.
the ice. See you at ice.
Bye-bye. Bye-bye.